Hey traders, Raghee here, and in this recap video we're going to cover a trade that we took in the closing session today in the chat room, and I want to walk you through the process because I think it's one that should be helpful to a lot of you that are day traders, and I want to show you some of the techniques that I used and how you can put this to work. So the whole setup was predicated on the last hour of the day, and when I look at the last hour of the day, I know that the second half of the day really begins with what we call the 1230 bid. That's one of the techniques that Neil Yeager, one of the traders in the Simpler Futures room, uses. And it's 1230 Central Time. As the market comes out of the lunchtime doldrums and the volume returns, and oftentimes there's a tendency for the market to be on bid. I've found that it's usually about 12:20 to 12:30 Central when this will happen. And there's certain times when that bid, that tendency, tends to accompany also a long setup, which is really when you've got a terrific opportunity. But that'll be for another time. But I want you to remember, okay, 1230 bid starts the second half of the day, takes us to 1 o'clock, takes us to 2 o'clock Central, and then the last hour of the day where I start looking for projected lows. And in the case of the Russell, what we did is we just started to look at the kind of highs that we had after 3 p.m. Eastern or 2 p.m. Central, the last hour of the day. And once we get that high, in this case, you can see we're looking for a minor high to be left behind. And by the way, every one of these highs, every time we punched up to a new high, you could have done this calculation. But notice the minor high wasn't complete until this candle printed, and then this following candle followed. And once it got below basically that low, this is candle number 1, this is candle number 2, and this is candle number 3. Once it got below this low, then you have left behind a minor high. So then I start to calculate, all right, what was this high? You can see here it was 1685.40. Okay. And then what I do is I subtract 3 levels that are in line with the hourly price movement range for this time of day. And I've talked about this in previous recap videos, so some of you might be aware, but there's a tendency for the Russell during the last hour of the day to move anywhere from about 4.5 to 6.5 points, and that then projected a low essentially at 1681. Not essentially at, that's exactly what it was at, 1681. So by the time we're trading through about 1684, 1683 and change, we know that 1681 is the level that we're looking to engage at. In fact, that is what we talked about in the chat room. And basically once we hit 1681, you can leave a limit order, buy order, waiting, or you can execute it at the market by just clicking your buy button. I'm a big fan of leaving conditional orders, like a limit order, at a price level like that, and then letting the market trigger the buy. And that's exactly what it did with not only the candle that triggered at 3:35 p.m. Eastern, but then again at 3:40 p.m. Eastern with the 1680.70 low. So we easily traded at and through 1681, allowing that limit order to trigger our buy, and then you can see subsequently what happened. Now, here's the thing. I think a lot of traders during the last hour of the day might feel like the market's getting away from them when we start printing higher highs. But what I'm here to remind everybody is the market has a tendency to put in a certain range, and I don't know if that range is going to be moving higher or lower. Nobody does, generally speaking. But I know there's a tendency, so why not use the likelihood that we could sell off anywhere from 4.5 to 6.5 points to pinpoint or project levels that we can buy from? And that is exactly what set up that trade going into the close. And that is literally the blueprint for that trade right there. Okay? And I love setups like this where you have a level, sometimes points and points in advance. You're able to put an order out there. The market comes to you, triggers your order, and then you can just go about managing a trade. And this is the same thing I'll do in the NASDAQ, the S&P, and the Dow. Now, one thing I want to mention, and we'll talk about this in the premium video, what kind of impact would the different sectors, which were pretty strong, and the Facebook earnings have on something like the NASDAQ? Why focus on something like the Russell? And we'll talk about that in the premium video. How do earnings impact our trades? And the other thing I want to talk a little bit about too are some of the Fibonacci retracements and some of the tools that I use, whether that be the halfback 50% or other strategies like that, that allow us to confirm different levels are in play. And I want to remind everybody that next Tuesday, I'm doing specifically not just futures trading, but day trading stocks, futures, heck, even in Forex. How do you intraday trade these markets using a lot of the tools that I use here, like the Fibonacci-based moving averages, the Fibonacci-based moving average crosses, aka the propulsion indicator. How do you use these tools, which, by the way, are free? I'm going to be doing a training next Tuesday, and I'm going to be sharing with you how I use Fibonacci and propulsion to better set up certain kinds of trades in these markets. So hopefully you guys can join me there. It's you can get more information at simplertrading.com/summer, and I'll have more information on that in another video coming up. All right, have a great one. I'll see you in the next update.